Hello, everyone, and welcome to today's Advisor Today webinar. We are celebrating Annuity Awareness Month and have a really special webinar that we're going to present today with a great panel of speakers. A couple of housekeeping notes. This will be recorded, so you can feel free to distribute this out to your other colleagues and people in your offices and whatnot. As well as if you have questions, please feel free to either use the Q&A or the chat, and then Bryon Holz will moderate that at the end as well and ask our panelists any questions that you might have. As well as if you have any questions afterwards, feel free to write us at marketing@naifa.org, and we'll be happy to ask that of the panelists and of Bryon Holz. So since I mentioned Bryon Holz, it is my honor to introduce our NAIFA National President, Bryon Holz, who will moderate our panel today. Bryon, I will turn it to you.
Thank you very much, Suzanne. I really appreciate it. And greetings to all of our viewers today. And happy, not only is it happy Annuity Awareness Month, but today specifically is National Insurance Awareness Month. And of course, annuities are one way to ensure your retirement income. So we're glad you're here joining us. We've got three distinguished panelists joining us today. Allow me to introduce them to you. First, we have Bryan Albert, our Vice President of Head of Sales with Eagle Life Insurance Company. Welcome, Bryan. We have Ellen Donovan, who's an external wholesaler with Allianz Life Insurance Company of North America. And lastly, but certainly not least, we have Rona Guymon, Senior Vice President with Annuity Distribution, Nationwide Financial. Rona, let's start with you. Please share a little bit about yourself, your company, and a little bit about your annuity product line and the annuity solutions you have.
Sure. Thank you for the opportunity to be here today. It's a pleasure to speak to everyone. So as you mentioned, I lead annuity distribution at Nationwide, and we distribute a full line of annuity solutions through financial professionals in multiple channels. That includes your traditional brokerage, broker dealers, the advisory space, the IMO space, and also the institutional space. And our product solutions cover the entire customer financial life cycle for all product types, meaning we offer SPIA, MIGAs, FIA, RILAs, variable annuities, both traditional and IOVA, and advisory variable annuities. So having that breadth of product has really allowed us, again, to meet all of the customers' needs based on their financial cycle, but also has allowed us to grow and to become the number 5 carrier in market share this year.
Wow, that's awesome. Thank you so much, Rona. We know Nationwide is certainly on our side. Ellen, please introduce yourself, share a little bit about your company, your product, services, and such. And I know you're in the North American division. I was down in Sydney, Australia last year for a global meeting. Allianz is everywhere, it seems, my goodness. Please share a bit about yourself and your annuity solutions.
Yes, thank you, Bryan, and thank you everyone for joining us. It is funny when you talk about Allianz as a carrier, it's not a household name here in the US. Were you to go over maybe to Germany where we're based, or even in Europe in general, you'll see a lot more. It's kind of like the Allstate or State Farm of Europe, and a lot of people know it now because we provide travel insurance for some of the big airline carriers. But Allianz is a global company. I think one of the fantastic parts about the American financial industry is that it's really allowed us to farm many different types of annuities. Similar to Rona and Nationwide, we also provide FIAs, variable annuities, and RILA hybrid products. I specifically specialize on our fixed indexed annuities at Allianz. I think Allianz has really cornered the market for income over the last couple of years, and that's what we've become known for. And I'm excited to see what our future holds in the accumulation space as we're seeing the market really shift to that, which I know we're going to dive into a little bit more. I've been in the industry 7 years. I had the unique opportunity to work for a couple of financial advisors prior to getting recruited over to the carrier side and wholesaling annuities, and really excited for the discussion today.
And we're so glad to have you, Ellen. Thank you so much. Bryan Albert, Eagle Life Insurance Company. I love the name Eagle. That's so American, and of course fits right in with NAIFA and our advocacy message. But you're also affiliated with perhaps an even better known company as well. Please share a bit more about your company, yourself, and your product solutions.
Absolutely, Bryan. And thank you for the opportunity today. So my name is Bryan Albert. I'm head of sales for Eagle Life. Eagle Life distributes fixed indexed and fixed indexed annuities with living benefit through independent broker dealers and bank broker dealers. We are a wholly owned subsidiary of American Equity. American Equity is the third most successful seller of indexed products of all time. Eagle is focused specifically on the registered rep, who also is an insurance licensed individual. As I mentioned, we sell fixed annuities. We really focus on accumulation fixed index and income fixed indexed annuities. One of our biggest producers says, you guys are a lot like Chick-fil-A. I was like, oh, all right. Tell me more. He said, you guys don't do everything, but what you do, you execute with top shelf product, top shelf wholesaling, and what I'll argue equally as important, top shelf service. And he said, and by the way, you're both closed on Sundays as well. So that's what we do here at Eagle, focusing on the registered rep, offering fantastic accumulation and income products. Happy to be here today. So thanks, Bryan.
Thank you, Bryan. Happy to have you. That's fantastic. So there have been a lot of changes in annuities in the last 10 years, 20 years, even in the last few months with interest rates and everything changing. Bryan, what do you see are some of the key trends you're seeing right now with annuities that advisors and agents and our listeners and viewers need to take advantage of on behalf of their clients?
Yeah, I mean, we've certainly seen change. You've seen a lot of engagement. You've seen certain companies enter certain spaces and exit certain spaces. I think at the end of the day, the good news is that the interest rate environment is favoring the ability to package, price, and offer very attractive products for the advisor. More importantly, very attractive for the end user, the client. And so that whether it be the spreads in interest rates or just where interest rates are, we all know where the 10-year is, it's creating a heck of a value proposition for that end user. That's the great news. We're seeing that in year-over-year sales increases. I can share at Eagle Life from the fourth quarter to the first quarter, we saw a 32% market share gain. So, that's an industry stat that we're getting to take advantage of. What I would say is, as far as taking advantage, or just make sure that advisors, we should all kind of take a step back and make sure that we are monitoring what exists today, specifically today in the annuity space. I don't care if it's fixed, FIA, VA, RILA, because it's probably a better value proposition than something they looked at from 2016, 17, 18, 19. There's some really compelling value in the market today. Take advantage of it.
That's great to know and great to hear. Ellen, please share with us what you see as key trends right now going on in the annuity square and how that can better serve our clients and prospects.
Yeah, absolutely, Bryan. So I think the biggest trend that we've really seen over the last 8 years or so is the shift to the accumulation space from an income space. I mean, we took a look at sales from FIAs in 2014 versus 2021, and it was a 60-40 split of income in the early, 2010s when FIAs were really surging in their popularity again. And then we took a look briefly after COVID, and it's completely shifted to accumulation. Now, I have a couple of different theories of why that is. I mean, we were in the longest bull run of time, so people didn't need necessarily the income, or they thought they didn't need it, that were in FIAs. Now, the other reason is I think accumulation products tend to have a rap for being simpler products, and it's really hard to regurgitate all the fabulous features that all the panelists and our Allianz as a carrier have. That being said, I think one of the biggest things that is a piece of advice that I give advisors that I work with is be curious about the features that are on products today. Income annuities now are not what the forefathers of FIAs thought they were going to be in 1997. We've got increasing income riders now. There are living benefit riders. These are the things that I think you're really going to need to be asking of carriers going forward. Carriers can't succeed unless we get feedback from advisors on what they value. And I think coming back to the table and taking a really strong look at what income riders can do for your clients. I mean, I compared when we were in the pandemic, 100 years earlier, we had the Spanish flu. People weren't living through it. Now people are living into their hundreds after getting COVID. It's just the reality of what we're being faced with in today's growing market. And it's a top concern. And if advisors aren't addressing that with some sort of income solution, or at least outliving your money, I think they're really going to be left in the dust. So I'm excited to see really the boundaries that we can continue to push from an innovation standpoint to really support client needs as we have an aging population.
they say the only thing that stays the same is change, of course, right? And although we've seen a lot of change, some may have lamented the old 10, 15 years ago, how great annuities were back then. This certainly seems to be another renaissance of annuities. Perhaps we can ask, is this as good as it gets? It's pretty good right now if you're using the appropriate product with the appropriate solution. That's fantastic. Rona, share with us some of your thoughts and about what's going on right now as far as trends and where you see annuities going with helping our clients and prospects.
Yeah, I think I'd like to expand on Ellen's comments related to the customer. We are focusing right now on who the future annuity customer is. And so we did a qualitative survey of both Gen X and baby boomers to figure out what's important to them. And some interesting things came out of that survey that I thought would be pertinent to this conversation. And one is that they are very interested in the benefits annuities provide. More than 8 in 10 future consumers have a positive and or a neutral impression of annuities. And so the interesting fact is that financial advisors are the key resource, right, for learning about annuities. And a financial advisor's recommendation is the top motivator for buying an annuity. However, in that same survey, out of those people surveyed, they said 1/3 of them had never discussed annuities with their advisors before. So we have this trend that consumers are very interested and actually have a positive view towards annuities, but advisors aren't having those discussions with their customers. So I think that's a big takeaway. And then in that same survey, we heard about the 5 benefits that resonated to those customers. Number 1 was, of course, the guaranteed lifetime income. But number 2 was the protection in principle. Number 3 was the investment growth opportunities. Number 4 was the tax deferred growth opportunities. And number 5 was the way to leave a legacy to loved ones. So as you can see, they view those benefits positively. So to me, I see it as a great opportunity.
Fantastic. In the last couple of years, we always try and do something with annuities on our social media campaign. We've actually had clients and prospects, just friends, people who know us through social media, other ways, approach us about annuities and ask us about them and eventually purchase them and invest in them. So that's very different than the old days, where we had to maybe cross a bridge to get there. So there's certainly a lot of changes with that. What advice, Bryan, tell me, you're with a firm that does a lot of marketing and works with a lot of advisors on the income side. What advice do you have for an agent or advisor who's kind of new to annuities and has apprehensions about sharing them with their clients and prospects as a potential solution? What would you have to say to them if they're kind of new?
Yeah, I mean, look, I think it's a great question. I think it starts with education, right? We owe it to ourselves, we owe it to our clients to make sure that we're staying up to date on all the tools in the tool belt that can help our client with the end in mind, right? Want to retire, and stay in retirement, right? Kind of in that order. And I would say lean on your wholesalers. Look, we've all got, everybody represented on this call has fantastic professional wholesalers that it's their job to get the advisor comfortable, to know all the moving parts, all the ins and outs, and all that's most important for the outcome of the client. That's the first step. And look, you can't meet with every company, but you can start with those that are truly dedicated, like you mentioned with us in the income space, doing some pretty special things with, I'll say, industry first roll-ups and industry first payouts. I just think it starts with the wholesaler of educating the advisor and making sure that we understand. It goes back to what I was talking about earlier, is today's annuity the same annuity of yesteryear? And it's really not. It's amazing what these companies and the ones represented on this call have done to broaden the opportunity to be in front of more clients. And at the end of the day, Bryan, I'll say this. These lifetime income solutions, whether it's on a VA chassis, a FIA chassis, a RILA chassis, what they do is this. They allow the client and the advisor to take a withdrawal that otherwise would be unbelievable, would be an E&O violation, would be unsafe, by passing some of that risk to an insurance company on a portion of the assets. We're not talking a whole pie here, right? It's a piece of the pie. But that's what the annuity does. It allows the client to take an irrational withdrawal off of a portion of the assets to lower the withdrawal rate risk on the other monies the advisors are managing, let's just say in a managed account. That's the outcome. That's the goal of transferring that risk.
I like that, an irrational withdrawal, because you're pooling that risk with hundreds, thousands, perhaps millions of other investors. Fantastic.
You nailed it.
Anyone who's familiar with the Monte Carlo scenario, right, and the maximum withdrawal rate from a portfolio would certainly be able to appreciate the benefits of a good annuity with a withdrawal benefit. No question. In the last couple months, actually last year or so, during my client reviews, so many of them who have annuities have been just so grateful that they weren't totally exposed to the market risk with the ups and downs and the volatility. Certainly the circumstances that we've experienced in the last few months, last few years, the ups and downs make the annuity solution even more attractive. No question. Rona, what would you say to an advisor who hasn't used annuities much, or maybe has some apprehensions about introducing them to their clients and prospects? How would you suggest they position them, or at least open the conversation with them?
Yeah, I think it comes to understanding first that it is a financial planning tool. So as Bryan mentioned, it's not for 100% of the assets. It's a tool that helps provide better retirement outcomes, which allows customers to fully maximize their retirement without fear of running out of money, right? So if you understand what it's meant to do, then you can seek out maybe other financial professionals that are utilizing them today successfully, and ask how they determine when an annuity is right for a customer and which annuity is right for a customer, right? It's always great to learn from our peers. But then also there are some really great opportunities for free financial education. There's, NAIFA, there's LIMRA, there's IRI, there's the Alliance for Lifetime Income. All of these resources provide not only customer education, but advisor education. So I think there's some really great resources, some great opportunities to learn on the best practices of leveraging annuities inside a financial plan.
Absolutely, no question. Now, when I talk about annuities, a lot of times I'll introduce it by talking about other investments that our clients may have. We talk about boats and recreational vehicles, RVs. And I think a lot of our clients can relate to that. If you have a boat, you need to use the boat. You need to go out and boat. If you don't, you need to sell it, right? The same thing with an RV. If you have an RV and you're not camping and going out and using it, it's not really good stewardship to have that RV in your possession. And I share that when I talk about annuities, because I think in general terms, if you have an annuity, we think of that as providing income. So it should at some point, for the most part, provide you with an income. But then I say, annuities are also a little bit like birds. Most birds are built to fly, in that example for income, but some birds don't fly, and that's fine, and they're good birds, and they have other purposes in life, right? We have penguins, we have kiwi. And so it's the same thing with annuities. Most annuities are built for income, but there are other types of annuities that are built for other purposes. Share with us a little bit, Rona, about what you see as some of the birds that you have that don't fly.
Absolutely, I like that analogy. So when you think about annuities and the progression of annuities over time, one of the most recent areas of growth is the RILA space, the registered index linked annuity space. And this is the idea that you can invest in indices and have some protections built in, some downside protection, either through a floor protection or through a buffer protection. Nationwide jumped into this industry, that product line, I should say, about 3 years ago with a floor only concept. And a floor protection basically puts in a stop loss on the portfolio. So you have a known loss buffer built into your floor. It could be -5%, -10%, -20%, whatever you're comfortable with in wrapping that portfolio in. But it gives you a lot more upside, right? You're not limited to certain investments. You're not limited to caps. In fact, ours is an uncapped strategy with a floor protection. So really interesting space where you can accumulate, control your money, but have loss protections built in. And I think LIMRA projects that space in the next 5 years to grow by about 30%. So we're very bullish on the RILA market, so much so that we're bringing out a buffer version this summer, so that we will have two separate standalone products, a buffer and a floor product. So very excited about RILA.
That's fantastic. And of course, whether it's qualified or non-qualified money, annuities tend to provide that additional benefit of tax deferral. So that's pretty awesome. That's fantastic. I like to share down in Tampa Bay where I live, we have this rather large bridge, the Sunshine Skyway Bridge. It's huge, it's long, it's high, and some are afraid to drive over it. I'm fine driving over it because I've done it many times, and I know that there are some guardrails on the side. If it gets real windy, I know I'm going to be safe, not likely to fall off the bridge. But if they didn't have those guardrails, I'm not sure if I would be as comfortable driving over that bridge. And of course, annuities are oftentimes a bridge to retirement or other places in our life cycle. So thank you for sharing that, Rona. Ellen, please share with our viewers today maybe some of the birds you have that don't fly and have other purposes, other annuity benefits, as it were.
Yes, well, I really love that analogy too. I hadn't heard the bird analogy before. I always used to use the analogy of when you're buying a car. It's really similar to when you're buying an FIA. You know, a car salesman, you walk in, they say, "What are you looking for?" And maybe you want to say, I'm looking for the Corvette, but I need the Cadillac. I had the same experience. I was looking for performance, but I felt like I kind of had to say safety because I have a family at home, right? I don't think it's that much different when you're buying an annuity as well. There might be a little bit more guidance and education that needs to happen from the advisor standpoint. You need to be having these discussions about income planning and Social Security, but specifically in certain client situations, you are going to need to have birds that don't fly, or the flexibility maybe to clip the wings, if it will, throughout time. So I know a couple of our income products, you actually have the flexibility to drop income riders throughout time at any given anniversary. So again, what I would challenge people to take a look at is there's a lot of flexibility in these products. There's a lot of features that actually allow you, specifically on our FIAs, to lock in returns at any point during a crediting period. So having these flexible features, I mean, Bryan spoke about it. We're pushing the bounds of whatever these annuities were that we had 10 years ago and maybe we placed 10 years ago. So be looking for those innovative features. I think that's really what's going to push us. Now, I think that this is going to be a huge area of expansion, not only in RILA, but I think in FIA as well. We have to be able to have these birds where maybe you're clipping their wings or they don't fly, but you're still able to utilize them and be agile to the client's needs, because their needs 10 years ago, maybe for income or lack thereof income, that may have changed quite a bit over time. So be conscious of the flexibility that products give you and the longevity that they're looking at over time, and don't run into a place where they're not a replaceable product or something that can be shifted with ever-changing financial climates.
Those are excellent thoughts, excellent perspectives. Bryan, you know, in the day, 10, 15, 20 years ago, many advisors who specialized, who focused on, say, equities, would look at annuities and say, you know, that's not something my clients need. That's something that I think would be a good solution. But I know that Peter Frampton, for example, just had his farewell tour a year or two ago, and now he's on his Never Say Never tour. So I like to say that we should never say never about certain types of annuities as they evolve and provide different solutions. Right now, in the FIA space, for example, they have what I've seen as some of the highest income withdrawal rates of many products, given the high interest rates and such. Share with me some examples of why, or thoughts about why it's important to keep an open mind on these different products, and maybe some of the unique examples that your firm shares and others have for clients today.
Sure. Great question, Bryan. Yeah. I mean, look, I think we can all agree that going back to the late 2000s, that was known as the living benefit wars. And that was primarily on the VA chassis, right? And there were companies that would lock in your gains every 5 years, and then a company jumped every 3, and then they went annual, quarterly. I happened to work for a company for 20 years that locked in daily gains. We used to jokingly say, somebody's coming out with hourly, just, keep your head on a swivel. Didn't happen. And we saw that living benefit as interest rates plummeted over those next 7-8 years. We saw the value proposition pull back as well. Well, in reverse order, that's what's led to what I'll call this renaissance we're in right now. I mean, at Eagle, we have 2 living benefit options. We've got one that says income soon and one that says income later. We clearly can show you what's better for a client depending on their specific situation. But on our income soon product, we roll up guaranteed lifetime income at 14% for 5 years with daily vesting. You don't have to manage to an anniversary with us. That's an income soon play. Well, we got a 12% roll up for 10 years. That's an income later play. These are two numbers that have never been seen in the industry, along with age banded payouts that go up while you wait over a 30-year time frame. So, you know, the dollar amount or the percentage at which you are guaranteed lifetime income, I'll speak specifically for Eagle, is as high as I've ever seen it, as far as the ability to capture that gain, lock in that guarantee. And then we even allow you to add money to existing contracts without starting a new surrender. So we're add money friendly. One key benefit, and you know this as a planner, that we're seeing huge traction in, and this may go back to your last question a little bit about kind of our little bird that may not take flight, but needs to be known in the industry, is if we're doing full-blown financial planning, we're not doing that to the full extent if we're not factoring healthcare, right? And we could have a whole conversation about long-term care and the difficulties, the expense, the going up, the use it or lose it, can't qualify, don't want to pay it, all the issues. Well, built into our contract for no additional cost, we have something called the well-being benefit. And it is not a long-term care contract. It's not long-term care, period. But what it does say is this. It says that if the client were ever to fail 2 out of 6 activities of daily living with no underwriting, no waiting period, we will double that income with a doctor's note simply telling us Miss Smith's failing 2 out of 6 ADLs. We'll double that income for up to the next 5 years. Should she live past that 5 years, we're simply going to bring the income back to where it was and continue to pay that non-reducing lifetime income. This is huge. The math says, the stats say there's a 50% probability our 65-year-old clients and older will need some form of enhanced care in retirement. Maybe not full-blown long-term care, but by having this added benefit, this bird that may have to take flight on top of a lifetime income solution, what does it allow you to do? It allows you to take a larger lifetime income off of one bucket of money so that it doesn't blow up the plan on the non-guaranteed bucket of assets. So there's so many great benefits today that the advisor needs to consider. And one of them is certainly healthcare and the difficulties with the baby boomers that could create. We've already seen it with the pricing of long-term care. So just something to consider there that's very exciting and very much appreciated of what we're doing on the Eagle platform.
Absolutely. As someone with a parent in a long-term care facility, I can especially appreciate how even that little, what seems like a little bit, doubling of that income is huge and can really be a benefit to families in that situation. No question. Let's talk about the title of this webinar, How to Increase Your Annuity Sales. Let's get to the fun, juicy stuff, the sales ideas. Ellen, you're in the field, you work with advisors all the time. Could you share with our members some of your best responses, best ways to sales ideas and objections, maybe answering objections, some of your best? Give us some of your best.
Yeah, absolutely. Well, first, my biggest piece of advice for maybe if you already have an established book of business is don't reinvent the wheel. We already had to reinvent the wheel during COVID. Don't worry about reinventing the wheel all over again. We have seen such tremendous success with advisors being able to hunt in, again, the zoo versus the jungle and being able to really broaden those client relationships. That can be done in a number of different ways. I would say the biggest way is make sure that you aren't just doing seminars for new clients. Have appreciation events or re-education events for existing clients. We do a retirement risk readiness survey at Allianz, and the number of people that respond, if my advisor isn't constantly educating me, which has really been the whole premise of this webinar, but specifically around if my advisor isn't bringing up Social Security, if they aren't bringing up the fact that I have these other assets, I'm going to leave them because someone down the street could be. So continue to have these re-education events. And that way, you really don't run the risk of having what we'll call plate lickers, because those are already existing clients and you're continuing to show them love. The other thing that I would say, similar to Bryan's comments, is be educating clients about where you're taking money from. One of the common misconceptions I think that's happened over the last couple of years with annuities is their inflexibility and their lack of use within the marketplace. But what if we were able to, in a market like COVID, and unfortunately the market environment, I mean, clients need a wake up call every 10 years or so. We had it in 2008, and unfortunately we had to have it again in 2021, excuse me, to kind of wake clients up to the realities of the game that we're all playing. What if we're able to be shifting and agile and have this guaranteed income platform that we're building off of? You have pensions, you have Social Security. So you're talking about all these things with clients, you're educating them on the different ways that we can build in healthcare protection. But then you're able to say, we're going to pull from this bucket of money versus this bucket of money in the various different market environments. The other thing that I would say that is maybe the biggest, and I know we're probably going to dive into this more, but one of the common objections that we get is the long-term nature of annuities right now. Here's what I will say. We are in a renaissance age of annuities. We are in a booming interest rate environment. Why wouldn't you be looking at a product that's maybe on a 10-year chassis to say, hey, why wouldn't I lock this interest rate environment in right now? It is what we pay all of our actuaries, you know, the smartest guys in the entire building. Maybe we're on the top floors, but they are the smartest people in the room. They are building out these 10-year products and pricing rates and benefits for that market environment. And I think that's one of the biggest things that we keep hearing about. We hear a lot about MIGA rates. We hear a lot about SPIAs. We hear a lot about bank CDs. Why wouldn't I just put my money into that? True, but what are you going to do in 4 years? What is the reinvestment risk you run into at that point in time? Why wouldn't you lock in a 10-year rate, right? We all pretty much live and die by the 10-year treasury rate in this business. Why wouldn't you lock that rate environment in right now to protect yourself for the long term? So those are some of the ideas that I share, but I would say stop reinventing the wheel. Take a look at what people did during the COVID times. Be idea sharing, that's part of my job. And companies pour so much money into the relationship that I have with advisors and even our various inbound lines. Those are some of the most educated people on the sales desk. So I would encourage people to call them and ask, what are you hearing? They're talking to hundreds of people a day. Why wouldn't you use us as a resource? So a couple of tidbits there.
Fantastic. The biggest takeaway is to use your wholesalers, your annuity wholesalers. They're awesome. They do a great job. And certainly you're one of them. Thank you. Again, that Ellen is with Allianz, for those of you who joined us later and didn't hear who everyone was with. Rona, I'd like if you could please share with us, and of course, Rona's with Nationwide. If you could share with us some of your best sales ideas for annuities, maybe answers to objections. And I know earlier we spoke a little bit about the Wizard of Oz or Penn and Teller, about looking behind the curtain as a way to preempt objections. Share with us, Rona, some of your best for our members today, and how to position and share and sell product solutions of annuities.
Absolutely. So I loved Ellen's ideas because I'm in agreement. Finding yield today is one of the easiest things we can do, especially in comparison to your traditional bonds. So finding ways to substitute what low yielding bonds you have or low yielding bond funds, looking at MIGAs and FIAs for those. And I agree that this is a fabulous interest rate environment for us. We're able to provide so much more consumer value than we have in over 10 years. Let's lock that in, right? Because once inflation does get handled, which you know, they are saying there could be 2 more interest rate hikes, but once it does come under control, they will start cutting rates again. And so, to Ellen's point, your reinvestment risk later down the line is going to be more than if you lock in today. So love that idea of finding yield. Love the idea of cash on the sidelines. There's over $5 trillion in cash savings and money markets today. It has flooded the especially asset management money markets since the run on the regional banks recently. So there's a lot of money just sitting in cash. And to be quite honest, if you go out to bankrate.com and look at the average 5-year CD rate right now, the average across the industry is about just under 2%. So banks have not risen their rates as fast as annuities have. So if you know people are on the sidelines with cash, there's a great opportunity to have quality conversation on leveraging the interest rate environments in annuities versus the banking establishment. But take that into another product line that I think is really timely and providing a lot of consumer value today, and that's variable annuities and variable annuities with living benefits. As interest rates increase, that does affect how much we have to reserve on capital and also how much we can pass on to the customer. We're seeing the best living benefit roll-up rates and income rates that we've seen in 12 years. So the other great thing is, as Bryan has alluded to, is there's been so much progress and innovation in product development that our living benefits today don't have the same restrictions that they've had the last 5, 7, 10 years. For instance, we offer the ability to choose between 3 different variable annuity riders based on how your client anticipates spending their money in retirement. Do they need the flat level income? Do they need increasing income? Do they need decreasing income? We can customize the rider to the customer's choice. And some unique things about that, we now allow 100% equity investment in those riders too. So you have complete investment control, because that has been a complaint about variable annuities in the past as well. Is too many investment restrictions, managed volatility. Well, now you have over 300 funds to choose from, and you get to pick how much equity you want to underwrite your living benefit rider. So if you haven't looked at VAs in the past, I definitely would say look at them again. Great market environment. The DCA rates to get into them today are very strong, and then you get really great roll-ups and income benefits too. So just a couple of ideas there for you, Bryan.
Excellent. Thank you so much. Bryan, you've been doing this for a long time. You've worked with a lot of advisors and, of course, great teams at different places. Share with our viewers today some of your best sales ideas on how to position annuities and maybe answers to common objections.
Yeah, look, I mean, as far as sales ideas go, I think you've already heard some of the low-hanging fruit and best ideas. I think there's an obvious opportunity through the wholesalers of these teams represented on this call. A wholesaler can make a difference for the advisor with sales ideas in one of 3 ways or 3 ways. I always describe it as one is across the desk, and that's with education, subject matter expertise, advanced planning capabilities. Your wholesalers should be bringing that to the table to you as a table stakes. The other way, though, and I'll just concentrate on this, is a sales idea where we are having phenomenal success, is what we just call a BOB, a book of business review. And it's amazing the flows we are creating right now, where we get to sit next to the advisor on their side of the desk. And whether it be looking at their proprietary lookup capabilities at XYZ broker dealer, whether it be third-party client aggregation sites, whether it be their client client works through LPL, whatever the broker dealer is, we've got these incredible abilities to look at these old annuities and do a combination of things. Because again, we keep talking about, boy, those annuities I sold 6, 7, 8, 9, 10 years ago, I may be at a 4.5% clip in total expense. And because of the richness of some of these living benefits today, I can create a pay raise, whether they're taking income or not in many instances. I can, in many instances, go from single life income to spousal income. We know during the living benefit wars and the majority of living benefits sold on VAs, some 80% went with a single life rider. 80% of our clients aren't single though, right? So where are we having success? We're coming in and saying, let us evaluate your book at the old annuities, and let's see if we can create a pay raise, maybe go from single to spousal, step up the death benefit, dramatically lower the health, the total cost. And finally, we'll put a healthcare rider on it that says if you fail 2 out of 6 ADLs, we'll double the income for 5 years. I just filled out the annuity disclosure form. Oh, and by the way, the advisor would get compensated again, right? So there's a huge opportunity. Tens and tens of billions of dollars of annuities that can be right-sized and upgraded in this current market. That's a huge opportunity. Ellen alluded to it. The third I'd say is a good wholesaler can make a difference in front of the advisor's clients, whether it be one-on-one or in group education. We're seeing a huge uptick in that. The rubber band has let go coming out of COVID. People want to get out. They want to have fun and gain a little experience, education through those processes. That's the 3 things I would say of take advantage of expertise in the wholesalers. We grade our wholesalers on it. They have to do so many of these activities. And hold them to a higher standard on subject matter expertise, number 1, on book of business review, understanding their systems and capabilities, number 2, and number 3, educating their clients, getting in front of their clients.
Wonderful, wonderful. When I talk with my clients and prospects about annuities, quite often I'll be a little preemptive in bringing up some of the objections they might have. I know there are a lot of financial pundits and so-called experts out there that say annuities may not be the best solution. Yet time after time, my clients love them and they tend to really perform for them. But still, oftentimes in advance of our conversation at the beginning, do what I hinted at earlier, look behind the curtain. I love a good magic show. I like Penn and Teller, for example, because they show how the tricks are done. And so after I talk about the benefits and these wonderful features, sometimes they'll say, wow, Bryan, this seems too good to be true. And I'll bring that up and of course, let them look behind the curtain. I'll say that the reason they can do this is because these benefits are over a long period of time. And the magic is the law of large numbers, much like a pension works, spreading that longevity risk over hundreds or thousands or perhaps millions of people. The annuity does that as well to help them in the long term to benefit from that. We talk about the expenses. It's not free. There's a cost or there's an opportunity cost. And so just bringing those concepts up, bringing all those reasons how it works, sharing with them behind the scenes, I think helps better explain it and takes away their objections later on, because they know about the cost then. They know that the income benefit may not equal the cash value. And so I think it's just a valuable thing to remember, to be proactive. Speaking of pensions, pensions aren't what they used to be. Very few have pensions today. They're almost like those birds that have gone extinct, right? But many of my clients still do have pensions, whether it's Social Security, of course, which is a type of pension, or a defined benefit plan through their former employer. Any particular ideas that any of you could share about how to position an annuity for someone who has a pension plan on their own? Does that mean they don't need an annuity, or could it still be a valuable part of their solution? Who would like to start? Ellen, perhaps?
Yes, absolutely. So the one thing that I will say we're starting to see more of is companies even offering a cash out option on their pensions because they can't afford to carry them on the books anymore. So I think this conversation is going to come up even more of, do I stay in? Do I cash this out? What do I do? Here's a couple of the things that I would take a look at, and this is more how to position it, but it's also where the competitiveness of products can come in. Take a look at the few things that pensions are lacking. A joint survivor, so meaning that if spouse who is employed passes away, what happens to their surviving spouse? That is a situation, I would say 9 times out of 10, when I am comparing and analyzing our products versus pensions, where we are going to win. The joint benefits that are provided in annuities are fantastic. Even though you have to take maybe a smaller payout with a joint payout, it's almost always larger than what you have to do on a joint survivor pension. So, I'm sure you'll run into couples where it's like, oh, they can figure out what they're going to do on their own when I'm gone. I don't see that as the common objection. I see, how are we going to provide this income gap when I pass away? That's where I think bringing in the discussion of an annuity and saying, let's take this lesser cash out option and be able to build in a true joint survivor program, if you want to put it that way to them, because maybe that's the language that they speak. So that's the first thing I would take a look at. And the other obvious one is the death benefits provided within these pensions. I mean, Bryan and I have been talking a lot about the healthcare benefits that annuities can provide, the death benefits that annuities can provide. Pensions often aren't going to do that. So again, maybe 50 years ago, pensions were what annuities are now. But right now, I mean, we have products where you automatically get a 25% bonus up front. Pensions don't have that. They don't have this ability to have an income value that you can also take as a death benefit. So I would take a look at 2 things. I would take a look at the joint survivor benefit versus the cash out and putting it into an annuity. And I'll give you a little hint that most suitability departments are going to take a look at that too. So just a little precursor there. But also I would take a look at and bring the discussion back to, what are you truly trying to accomplish with these dollars? Is it income for you? Is it income for your spouse? Is it a combo? And what do you want to do as a legacy for your family? Because pensions do not have that flexibility.
Wonderful. About a month ago, one of my longtime clients and friends approached me with some information from a pension he had from a former employer. It wasn't a huge amount. It was barely, not even 6 figures, but running close. And he said, Bryan, here are my options. I have, 4 options: single life, 10-year certain, joint life, joint and 2/3, right? They're basically annuity options. We looked at what they would provide him and his spouse, and potentially for heirs, should they both, pass away after a relatively short period of time. And I was surprised to learn that the annuity solution was more attractive. It was an attractive option for him. I wasn't prepared for that. It surprised me. So whether it's the interest rates or the Renaissance, my advice to any of our viewers who are working with clients with pensions is to look for those opportunities where there are payouts. Perform your due diligence and see if that annuity could be a better solution for those funds should they have that opportunity. Certainly for rollovers, that's a huge market for many of our advisors, but also for pensions as well, for pension rollovers. Rona, you look like you had some things to share about this topic. Please share with us.
Yeah, it's actually a very interesting product line now that it's called pension risk transfer, to where these corporations, they don't want to carry the pensions anymore. And so they're outsourcing them to insurance companies like ourselves. We have a complete team that's dedicated to finding these opportunities and bringing those pensions into Nationwide for us to manage going forward. So another question for a client to consider is, are you confident your company would be able to maintain this pension? And if they don't, are you confident in who they're going to sell it to and how they're going to manage it as well? So you don't have a lot of control if you keep the pension at your existing company. So something to consider as well. Are you confident with where this pension will be, call it 10 years, 15, 20 years down the road when you really need the income? That could be another consideration why you want to look at annuities today for, of course, their competitive benefits, but also the fact that you then control your.
Fantastic. Excellent. Again, one of the biggest objections many of us get is regarding fees and expenses. There are a lot of ways you can approach it. I kind of touched on that earlier. Bryan, do you have any ways to ideas on how to have that discussion or how to answer those objections?
Bryan, I think you did a great job. I mean, I think first and foremost, it's that it's not too good to be true. It's too good to be free. These companies are not pro bono, right? If they were doing it for free, the living benefits would be even better, right? Or the payout would be even higher. So there's true money in the background. You're paying for something. I love what Nora said earlier is, if you focus on the value proposition, right? Is this an outcome that you would want? Is lifetime income important to you? I think focusing on what is important to the client and then being like, well, this vehicle can help with this portion of the allocation, right? Again, it's not the whole pie, it's a piece of the pie. But I think just focusing on what the outcome of the product is, the benefit of the product, and less on the bells and whistles and features, and let the client decide, is that something you want as a portion of your assets? I will mention one thing on the pension that I found interesting. You can go to Charles Schwab's and just run a SPIA, just on their free online calculator. If you run a SPIA calculation, you'd be amazed how closely that correlates with most pension payouts. So let me just give an example. So let's say a 60-year-old wants to retire. They want $5,000 a month. So they want $60,000 a year. And let's say that's about what it would take. $1 million right now on a SPIA on a 60-year-old would pay out 60 grand a year, according to Charles Schwab in a SPIA. So that's about what a pension would do. Just to give an idea, and they both gave great examples of this. If you did 300,000 in a SPIA for 5 years, okay, 300,000 invested in a SPIA for 5 years, and let's say you put 560,000 in an annuity. I'm going to use the Eagle as the example. In 5 years, that 560 would provide $60,000 a year. So why am I using that as an example? Well, you got to a position of you're about $860,000 in, so you still have $140,000 to do whatever with, to put in a managed account. So I'm just giving a math example of, we are seeing it right now where you can go after the pension. You can go, look, instead of you annuitizing that pension at the company and not having a lump sum, we can take advantage of some SPIA opportunity. We can take advantage of some income annuity opportunities and still have money in the managed account that you didn't have to say, poof, it's gone. So the math on those are making total sense. I just wanted to revert back to that first question.
Thank you for that. And I love that phrase. It's not too good to be true. It's too good to be free. Write that down. Remember that. That's wonderful. Fantastic. We're wrapping down. We've answered a lot of the questions here. Ellen, do you have any other thoughts on annuities, on objections, on positioning them? Anything else we need to write down? Share your final thoughts, please, won't you?
Sure. Well, regarding the fee conversation, I would say take a look at what type of product you're looking at too. I mean, the fees are going to be on a lot of the products that have a higher upside potential. And oftentimes what I will say, because we have two no fee options, true no fee options, your fee in that manner is really time, whether it's time of a surrender period or time of being able to turn on income. I mean, what kind of fee are you willing to pay? Do you want to pay me and have me manage the money if you're registered to do that? Or do you want us to have all the insurance company having the risk? That's the biggest thing I would say. Because I'm a wholesaler, I will also say that really be utilizing us and be a little bit unique about how you utilize your wholesalers. And the reason that I bring that up is that a lot of people, I'm pretty sure the first question I ever get asked when I come into an office and meet with someone is, what is your job? Like, what do you really, really do? Well, my responsibility is I help grow the relationship. I help grow your business. I'm almost like a business consultant. I'm looking at unique ways where we can grow your annuity business and help sustain your existing clients and get creative. So that's really what my job is. And everyone in my position across any carrier is going to tell you or should tell you the same thing, is what benefit are you bringing to me? There are a number of different ways where you can utilize the relationships that carriers have, and I would encourage everyone to seek those out. It's more than just writing a blank check. How is someone helping you grow your business? Writing a blank check for a dinner seminar is fantastic. That goes, in my opinion, surface level. Being able to have the business support that we can provide in our roles, I think that is bar none the only way that you are going to grow a sustaining business model and turn your practice into a business, right? That is the biggest conversation I've been having with clients is, let's move your practice, your day-to-day transactional into a full-fledged business model that has recurring revenue, that has all these different things. So please, I would encourage you to figure out what relationship you can have with your wholesaler that is going to grow your business from a practice into a business. That is the biggest thing I think coming out of COVID that I was excited about to see with our advisors. And if you have objections, call us. We probably get them from advisors and clients alike. So please don't hesitate to lean on your relationships that you would have. Closing remarks, I would say we are in a fantastic day and age for annuities. I mean, the interest rate environment is speaking for itself. As a carrier, hold our feet to the fire and learn more about our products. We are continuing to push the bounds of innovation. Every panelist on this board is, and you guys should be asking, what are you doing for me? It's not just a blank check, it's how can we grow your business together?
Absolutely. I think that it's important to recognize that. I live in Florida, which is sometimes called heaven's waiting room, where annuities provide a lot of our clients and residents with solutions for such an important part of their life cycle when they're retired or about to retire. The best wholesalers will tell us where they have strengths and where they might recommend even another company. So I think it's important to have those relationships and to be open-minded. And if you have a situation you're not sure about, bring it to a wholesaler, bring it to a company representative and run it through them. Because as Bryan suggested, we all talked about this. It may not look like it could be a good solution, but oftentimes the annuity is the best solution for a client situation. So it's important to have that open-mindedness and leverage their skill, their talent, and their experience. The three of y'all have had so much experience. We're grateful for your sharing that. Rona, please share with us your closing remarks and maybe some of your best to bring it on home for us.
Absolutely. First of all, it's been a pleasure to be on this panel, and I appreciate everybody joining us and asking these great questions. I think to wrap up, I would just like to re-emphasize the idea of this is the right time to be looking at annuities. Ellen called it out. It's one of the best interest rate environments we've been in. We're providing the most consumer value we've had, and there's tremendous innovation happening in the annuity space. So when you think about all of those things, and then remember the 5 benefits that customers are looking for relative to annuities, and that is the guaranteed lifetime income in retirement, the protection of principal, the investment growth opportunities it gives, the tax deferred growth opportunities it gives, and how to leave a legacy for your loved ones. Those are the 5 key ways customers are resonating with annuities and annuity concepts. So remember that. Remember, it's the right time to be looking into them and figuring out how they can fit in your practice. And I appreciate the opportunity.
Wonderful. Again, nothing does it like an annuity. Nothing can do it like that. We have so many wonderful resources available to our NAIFA members. We partner with such greats as Tom Hegna. And if you don't know who Tom Hegna is, get his books, read them, look at them. We feature them a lot around the NAIFA world. And of course, the industry Annuity Alliance, the Alliance for Lifetime Income, has some tremendous resources you can use in social media and other places. And these are free. And as I like to say, if they're free, they're for me. We've been answering the questions pretty much here as they pop up in the chat box here in the questions and answers. It's just been a wonderful opportunity here to share time with the 3 of you all. I do want to remind those who aren't maybe NAIFA members that we welcome and invite you to join NAIFA, the National Association of Insurance and Financial Advisors, since 1890, helping keep you in business. And on the legislative and regulatory side, we're helping make sure that annuities continue to be offered and available to our clients in all 50 states. Certainly an important part of the NAIFA advocacy message and value that we provide for our clients. And I'm sure our panelists here know that today. I think we have just another minute or so. Anything else that comes to mind from anyone before we say goodbye?
Hey, Bryan, the only thing I would mention is we spoke a lot about income and for obvious reasons, just the good old fashioned accumulation fixed indexed annuities and RILA products. Just realize they're at interest rate environments, let's just say in the accumulation fee space, over 10, 11% on caps on the S&P 500 when the historical norms was 5 and 6%. You heard it from Rona, you heard it from Ellen. Take advantage of this interest rate environment. That's unheard of. So, those abilities to capture S&P returns up to 10 or 11%, and then participation rates on some investments, participation rates over 200 and 300%. What a fantastic time just for those accumulation, whether it be on the RILA side or the fixed index annuity side. So just wanted to mention that.
Absolutely. And again, like we talked about the different birds, some of these annuities are no or low cost, right? There's actually no implicit cost or rider cost or very low. So be open-minded, take a look at what's out there. And there are a lot of great opportunities to use these in our client solutions. Rona, one more time, we had a question. What were the 5 things? Can you easily go through those 5 things?
Absolutely. So it was the guaranteed retirement income that they provide, the asset protection or return of principal protection. It was also the death benefit, so leaving a legacy for loved ones, the investment growth options that are available, and the tax deferred growth options that are available.
Fantastic. Thanks so much. Again, what a pleasure to be with you. A reminder to our viewers that this is being recorded and will be available to watch later on. And if you have any follow-up questions, feel free to share those with us through NAIFA. Suzanne, are you still there?
I sure am. I just want to thank everybody for joining us today. I did put in chat, if you want to take us up on our offer to join, you can visit our join page and see all the benefits of NAIFA membership at www.join.NAIFA.org/join. And then to Bryan's point, this archive will be available on our Advisor Today site, which is at at.naifa.org. So you can get this in about a day. It'll be in the webinar archive, along with many other of our webinars, our podcasts, and great articles, and feel free to subscribe. It's all free as a give back from NAIFA to the industry. So with no further ado, I'd say thank you to everybody for joining us, and take care. See you next time.
Thank you.
Well.